The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I just went through the update, so let me just do this. I'm going to treat it in a very different way. You can see that in the Dow chart, the MACD is still in the Dow chart on the left. That's the daily. The weekly is in the middle. Monthly on the right. 120-minute chart in the corner here. You can see that the MACD is trying to turn a little bit up. The histogram's just slowly improving. Hasn't crossed yet. If the Dow gets to 190, 200 points, probably 175 to 200 points higher. Probably that's the first time that the green line will touch the red line. That's very important that it crosses positive. The other thing is that the stochastic is still at 69%, not very good. The IWM was the weakest over the last couple of days, and then all of a sudden it's up 1.55%. That is very good action, and it keeps doing that. You keep thinking it's going to fade, and instead it comes on strong. You keep thinking it's going to rally sharply, and it kind of fades from the upside. Now, what we're looking at here is that it held the weekly 9-period moving average. The MACD is improving. Stochastic's at 86%, but the daily chart still needs a lot of work to be able to garner real strength. Now, what is really important is if you look at the FANG stocks, Amazon is up 7 at 1804. Very nice action. Just five big green candles. We'll see where it closes today. MACD strong, stochastic at 94% in the daily. Weekly chart is improving. Monthly chart needs a lot of work technically. It'll take the weekly chart to improve before it can get there. But this is good action. And it says that Apple, the next one in the FANG series, FANG, up 6.32, up at 194, up 3.37%. Well, they are turning the corner. For some reason, they've become the in stock for the Dow. This is very good. This is what's helping the Dow. It's up 193 points, the Dow at this particular point. And we're looking at 194.51. Isn't that interesting? 194.54 is the price of the Dow right this second. 194.55 is the price of Apple at this moment. Would you be buying Apple or would you be buying the Dow is the question. Well, Apple's got a long way to go to the 233.37 October high. Probably on a risk-reward basis, Apple's the one at this particular point over the next 3 months, as long as it holds 177, which is absolutely key support. It's looking pretty good here. It was dead stock earlier in January. Okay, so Apple's good. Netflix, in other words, the growth stocks are getting all the power right now. This is a peak. B in the daily is very good. Netflix, leg C in the weekly, and it's just piercing. Of course, got all of March to go. So it's just to say that at this particular point, it is piercing the downtrend line in the monthly chart. All-time high 423. The low was in the what was that? I should remember that. 231.23. I may as well just put it in because I'm going to mention it on 231.23. Very nice move up 0.09 today. Only a very small move up. It's got a doji type candle at 375.31. But what a nice move over 2 days, going from the 357-ish area to 375. I would say that's a pretty darn good move. So Goog, of course, that's Alphabet. I just can't say Alphabet as far as the stock is concerned. Goog is what we know. Google trading at 12.25, up $1.91. Also a really good candle, getting closer to the 1273.89 all-time high. That's not so far away, you know. 50 points in a stock like this. Monthly charts already improved a lot. So weekly chart is very good. Nice going for the FANG stocks. Did I do them all? Yep, I did. Oh, Facebook. F is for FANG. Facebook, not so good, down 71 cents. This one's the one that's striking. So out of 4 of them, 3 are doing really well. Okay, now, something I wanted to show you. The TLT, I had said, look at this TLT, at 123 right now. My comment yesterday was in late afternoon. If the TLT was at 122, it was in the 121.50 area. I said if it's at 122.50 or higher, that's going to be a sell the stocks, get into bonds type of action. And that's exactly what happened, except for one little thing. One little thing was that there was still residual strength. The QQQ had acted so well. Look at this yesterday. Nice, not even doji, after the doji candle of Tuesday, Wednesday, Thursday. Today's Thursday. Of Tuesday, there was a push above. It didn't close above, but it had a really good candle considering what the general market did. And today it's spiraling up above that. So the QQQs, the NDX 100 trading vehicle, Invesco QQ Trust Series, very good action. Now look at this. The semis yesterday were, I don't remember, I don't think there was a red candle yet, but it had been pulling back. It had made, almost made the high of, it had 107.68 was the high, but it had made a slightly lower high at the time, and I said, we're going to be watching this closely because the MACD had turned up. The stochastic was acting very well. It was in the 88%, 89% area. And I said, there's something wrong with this picture. And I discussed the fact that we've had inventories and shipments and all sorts of things, report after report saying they're not there yet. And look at this move. And sometimes that's the confusing factor, that the fundamentals are lagging indicators. And that's what we saw when it made the March high last year, and the technicals were still running high going into March, not the technicals of the fundamentals. The order entries looked like they were still going to be very good, but in fact they turned down very sharply. So this is interesting because that was the deflection to the upside that we saw yesterday, not in line with everything else. Here's another thing. The XLF took a, I'm looking at my questions here. The XLF took a whopper of a decline. And that whopper was from 27.10 just 3 days ago in the XLF, the S&P Financial Select Spider Fund. And it took a dive. It went down below 26.20, and today it went down to 25.78. That 25.78 level is above the recent low of the 8th of March at 25.68. And now you got a bit of a green candle, even though it's down on the day, green from the opening price to now, 26.07. I don't think it's the end of the XLF. I know it was hit very badly yesterday. I suspect that it's going to come back on strong. And because their books, remember, for a decade now, there's been pressure for the banks to fix up their books. I don't think they are fixed, but I think they are in the best condition that they've been in, maybe in 12 or 15 years. And that's just saying to me that people are going to look at them as fundamentally sound, and they're going to find buyers as a different sector to the high-tech stocks or the tech stocks or the stocks that are called growth stocks. I think it'll be the XLF that starts slowly to climb back, and later in the year, we'll start to see them for the next 6 months towards the last quarter of this year and the first quarter of next year. I'm thinking they could become leaders with the brokers. We'll see. I got a webinar coming up. I'll talk about it on April the 3rd, Wednesday at 5 p.m. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Real quickly, for those of you, I know we're looking at the 2-minute, the 5-minute, and the 10-minute. This is like looking at the daily, weekly, monthly. The 2-minute has made an all-time high of 2856.50. It's now trading at 2851.75. This is the first, in a little while, first pullback of time and some price. And if it starts to close under 28.48, it's going to take a little bit longer because that'll be under the weekly, and that's the 5-minute chart, support of 28.50 at the 14-period moving average. And the weekly, I've only got it in leg C, and they could still be a leg D by the end of the day. Wow. All right, well, we'll see, because these are the most important right now, the 2 and the 5-minute. So here we go back to, and on the upside, a break over 28.60 would just, it would be absolutely spectacular action on the daily. So I wanted to just show you a couple of things here. Here are the QQQs, Chapman Wave automated resistance points. 10-minute has 181.65, 182.37. We're at 181.50 right now. The 120-minute chart, 180.93, and we've been above that. And no support levels until you're way down. And the daily has 184.04 as a resistance. Unfortunately, there is one that you got to look at here. 178.89 was the one resistance that was taken out. And the next one is, there are two of the 181.95 and 181.66. So we're just bumping into weekly resistance. If we snap through that, that's going to be very positive. But in the meantime, back at the ranch, the support level is down at the 170. Where is that? Right there, 179.45 to 179.08 level. So there's quite a move there. The S&P, this is going to be something to watch for me, because the S&P had a resistance level of 28.56 yesterday. It pulls back sharply 2 days ago. It pulls back sharply after getting very close to, I think, 28.53s, and then it pulls back, and now it's back to the resistance level. If it breaks out, 28.96 will be the next one. I'm not saying it's getting there. I'm just saying that's the automated Chapman Wave notation. 28.46.52 is the short-term one in the 120-minute chart. We're at 28.45.75, and then a chunk of resistance levels in the weekly chart, from the 2861 area. So I'm going to be watching that. And this is, I thought, also very interesting when I was doing it, because I looked at the Dow, and the Dow did have a resistance at 26,297. We got to 26,241 recently, a few days ago, pulled back, and now we're at 25,920. The 10-minute chart doesn't have any overhead resistance, and neither does the 120. 26,034 is in the weekly, and 26,623 all the way to 27,100. So we're looking at this, and I'm looking at this, and I'm saying this is going to be very important. Why? Because of what the Fed did. You know, the Fed taking interest rates off the market is really saying that they're kind of worried about the economy. They don't feel that they have the weaponry to actually raise rates, and that's, you know, what are they going to do when they really need to be pumping money? Is it going to go down to, is this the Japanization of bond yields still continuing for over 30 years? This has to be something like that, you know. And 108 is the 108, the whole 108.85 to 109.11 area is the resistance in the SMHs in the weekly chart, and on the daily you just snap right through it. It's at 109.46, 109.06 in the 10. So these levels are going to be something to watch. This, I just wanted to for a moment go back. Yeah, there we are. We're at the level 2850 right now. This is going to be very important for the just a very, I'm talking about 2-minute chart, because I know there are people that look at this and they're busy trading away, and they just want to get a picture of what we're looking at. Now, there are a couple of things that I was looking at. I said I would do a little bit of work on the SLX. I had a question yesterday about, was it yesterday or day before, about X, and that is, X is the U.S. steel stock, and the SLX is this is the S&P, it's called, the Van Eck Vectors Steel ETF. And it's holding quite nicely here at 40.54, up 17. But I'm suspecting that it's in some individual steel stocks. Let's see what X is doing today. X is up a little bit. No, it's up quite a bit. It's up 53 cents. And I was looking at it yesterday, and I said, I don't see anything yet. It could be pulling back a little bit more. But today it had a bounce. It's still within the pattern that I was looking at. You remember I said this arch formation can go to an H formation. So until U.S. steel really breaks into the and what I'd said is I'd be rather buying strength. I don't know if I want to buy strength right now. Look, the MACD is turning up, and the stochastic has improved, but it's still stuck in the range, and it hasn't broken out over this very important high of the 12th of March, 28.03. Well, it's 20, did I say 8? I didn't mean that. I mean 20.83. 20.75. Sorry. I wasn't reading that very well, was I? So 20.75. So if we can get over that, then I think you have a chance to be looking at it and saying, now it's trying to form a base in the whole 20 area. And between 21, between 21 and 20, it should be trying to find a base. And that's going to be very important. The question I had about the XLI. Now, the XLI, of course, is really a much better vehicle for the industrials in the Dow itself, because this is much more industrial, one of those industrial stocks. So you've got an H pattern right now, trading at 74.50, up 57 cents, and it's up 0.77. The Dow's only up 0.68. So this is a better, I've been saying that this is a better benchmark for the industrials than the Dow is. I don't think the Dow can now really be called an industrial anymore. Verizon is, are we looking at, there we are we looking at Visa, MasterCard, American Express? Are those industrials? No. So this is going to be very important. Now, the other thing is that we've got this H pattern here forming the XLI. It needs to break decisively above the high of the 19th, 75.22. That'll be very good action. All right. And the question I had about, I've got it. I saw it earlier. It was a good question. I said I'm going to get to it. Oh, XAL, of course. The XAL, which is the airline index, the ARCA index, is up 47 cents, but it's making this lowercase, the dreaded H pattern at 97.48. It better not close underneath 96.31. That'll be terrible. If it does, that weakens the weekly chart tremendously as well as the monthly. It needs very quickly to get to 97.48. It has to get to the 99s. Do it fairly quickly. Let's look at Boeing. As you get more and more news about Boeing, you don't actually know what to say other than, for goodness sake, you've got an airline dealing with not just a couple of hundred people, not just a couple of thousand, but hundreds of thousands of people. If you have a problem with the plane, surely you're supposed to, your obligation is to immediately report exactly what it is, have it investigated within minutes, not hours, but within minutes. I mean, it doesn't have to be a problem, but if it is a problem, you want to deal with it right away. I'll be right back. Basil Chapman, Tiger News Hour. Dow's up 162, and their little EEM, I'm sorry, the E-mini, went to 28.49. Watching.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the E-mini is just testing the 28.48 level right now, having gone from 28.56.50 to 28, what was that, 28.47.75. And now it's just trying to bounce again. So I thought I'd go through that. So it was a tough call yesterday, and what I'd said to subscribers is that we want to be buying the Dow on a bounce after the Fed speak at exactly 2:15 If the Dow was plus, I can't remember exactly what I said, I think plus 30, plus plus 30 to plus 50s at 215, and we would start a long position for a quick trade, and I had a 1 point stop if that was bought. Well, it didn't get, it got there beforehand, but at 215, it had pulled back. So we didn't get it. And the reason why I had less than a 1% stop is that if that was going to work, then we should have had a follow-through rally into the close. I didn't want to get anything that was, and that was tight. For today, my thinking was I actually would have liked to have bought the U Dow, but the mix between the semiconductors pre-market say that it had given back quite a bit of the gains that Micron had indicated earlier, and the Dow was down quite sharply. So I thought I'll have to forego that, even though my thinking is that we need to get to, we don't need to, but we probably should be getting to a leg D in the Dow. So I just didn't put the trade on. But the reason why I did yesterday was if it worked, we wouldn't have had the sell-off, and we wouldn't have had the sell-off this morning, and we would have just continued up right through into the right through. But you have to be careful. We've got this whippy action. In fact, there were three. I had a Chapman wave trend gauge reading yesterday. I mentioned that be careful because at any point there could be a 9 to 11 point rally in the E-mini futures, which would help the Dow, even if it comes from lower. Well, we've had between the time that I mentioned this yesterday to right now, 4 such big moves. And I had another reading today where the trend gauge was very high. And that tells me there was, I wouldn't call it panic buying this morning, but there was a lot of short covering, a lot of intense short covering. So that the rigid arms trend gauge number went very high. So that once again says that within 2 days, we might have used it up today, but it said from yesterday when that occurred, within the next 2 days, and that includes the evening, includes the next day, and the following day, there could be another 9 to 11 point rally. We've already had that. Now, is that it? And it's all over for now. Now we go back to the shorts have covered. The people have been buying. Now we get to the regular market. We'll see. Days young. I can tell you this because look at gold. Gold had a really good move, and then it had another move overnight, and now gold is up $2.24 at 1303. It had a move to 1320.2. And now it is trading at 1304, down 16 from that level. And the MACD is just trying to cross positive, and the stochastic is good at 950, not great. It's just good at 50%. On-balance volume is showing struggle to get that on-balance volume to rally. And the weekly chart still says gold is just stuck in a range. And the dollar had a week. It was weak earlier on, and now it is up 72 ticks at 96.48. It is now almost at the high of yesterday. And that's the reason why I say that April the 4th will be the 1 year anniversary that we've been long the dollar. And it's gone from the 80 level, we're in at 88 level of the low of February of last year. We're in at 90, just a little off the low. And it's been a struggle to only take a little bit off because my thinking, and it's only my thinking, it's not the price, is that the monthly chart is held beautifully. It might be taking a little too long if it goes into April still sideways, but so far it's had a very accommodating pullbacks. It went to 97.71 twice. It's gone to the 97s, then pulled back to the 95s, and then it went to 97.71. So far, this is actually quite good action for the dollar. And I still think the dollar represents the U.S. economy, which is, so far, it looks like one of the best economies around. And that, to me, is important. As long as the dollar is holding, when the dollar starts to get under, if it does go under 95, I have to maybe rethink everything. But so far, this is a very common. Look at this. From yesterday to today, look at that red candle. For a currency to go from 96.57 to 95.74 in one session, boom. And then have a good green candle. It happens occasionally. Look, it happened there. But it isn't that often. So I'm looking at this and I'm saying, I'm impressed so far with the action today in the dollar. The EUR-USD had a nice spike yesterday. It was only a spike. It went to a leg B, just at about a 1.145, and today it's at 1.134, $1.13. And this is going to be very important because that weekly chart has gone back to saying, oh, no. And the monthly chart is saying, oh, gee, not another one, and a flat stochastic to boot. This is important stuff, USD JPY. And I'm just looking at it and I'm saying, now it's a way more complex market than it had been. I don't think it's going to be quite as easy because if you're in the wrong sector, and yesterday definitely the banks were the wrong sector, but if they can come back, the banks have had an intense period since the crisis of 2008, the Lehman catastrophe. And I'm looking at this saying, well, they've cleaned up their books to a large extent. We can't always see everything, but let's face it, if the Fed says it's looking good, we can say at least the Fed is somewhat satisfied. So they should find favor at some point. Now, what's really important is the yen, US dollar, Japanese yen, holding a trend line support, trading at 110.82. For me to get really bullish about the yen, rather than saying acting very well, but not, well, it came off that was a crazy session the week of January the 3rd, I think it was, when there was the spiral to the downside, the week of the 4th of January of this year, 105.18. It's straight. Let me go to the candle itself right here. Look, on 105.18 on the 3rd of January. It opens at 108.87, goes to 108.92, and then kaplop goes to 105.18, and then the next day it actually opens way higher. So this is, I don't know if that's an aberration. It wasn't the price that were trades, but I don't know if I have to exit out as to say that's not as important as it looks. But this is very nice action in the daily. It's not great yet. And the weekly chart says holding very well. I will get impressed if I see the yen trading at 111.25 to 111.33 with the MACD starting to improve, stochastic improving. It's going to take a while to do that. So in the meantime, the yen is in a range that had a really nice bounce from, let's just say, the 108 level. Call that an aberrational move to the 105s. We're ready from 108 to 112. Good move, holding steady. I'll be right back. Basil Chapman, Tiger Conditions Hour. Love to take your calls at 877-927-6648. Dials up 136.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I have a webinar coming up. This is the webinar called Anything Goes, coming up Wednesday, April the 3rd, 5 p.m. for subscribers. You can become a subscriber. Just go to the front page of TFNN. It's you'll get my my webinar, you'll get my newsletter, and there's a money back guarantee. So this is really, I think it's going to be one that for the very first time I can start to talk about aspects that correspond very much to a chunk of the 1920s socioeconomic area, some of which were missing, the little parts that were missing for a while, I think are now coming together. We're looking at Trump now owning the stock market. He just made it real clear. And now we've got, from yesterday's action, we've got Bernanke, whoops, Freudian slip. We've got the Fed owning yields. I think this is very interesting because it sets in place a mentality, a psychodrama that allows certain things to be off the table and on the table. We never had that before. We didn't have that kind of clarity before. If you remember, I kept saying, why on earth does President Obama not keep talking about the fantastic stock market? It was like an embarrassment for him. Of course, it's probably not an embarrassment for him now because he's probably doing very, very well. But I could never understand it. He just, even in the election period, it just never came up. It's like an embarrassment. So this is the first time that you've got a president saying, hey, this is the stock market. Then, of course, you remember Coolidge said, what did he say? A chicken in every pot, a car in every garage, or something like that. So all of a sudden, you've got, it's going to be for capitalists to be talking about growth. It's going to be capitalists have to talk about what happens, that all these plans that you're talking about couldn't come about unless there was capitalism, successful capitalism. The colleges that are failing now, these colleges that, the smaller colleges that just can't afford it, they need big donors. Where do the big donors come from? They usually come from the stock market people. And it's just an anachronism. It's just, there's an irony to it. You've got the kids yelling on campus, you know, maybe down with capitalism, up with socialism, and their entire, the smorgasbord of opportunity there is really based on capitalism. And we know that capitalism always goes awry. There's always a period where capitalism gets excessive. This is the period of excessivity I think we're coming into. That's going to be part of my talk on that, my webinar on the 3rd. None of this is, of course, a guarantee. It's just my thinking. I'm not an economist. You know, I just do my job here, technical analysis, and I've looked at trends ever since I was just a little pup. I always used to think of, wow, that's very interesting. I remember when the station wagon came out, and I thought, oh, station wagon. And these are things that I look at, and they stay with me for a long time, and then they kind of build up a library in the background, and then I pull out the drawers that I think are the most important. And that's all it is. But I'm thinking it's going to be a very interesting summer. And this summer is going to tell us a great deal about whether or not we have this explosive rally into 2020 that Trump can use, because it's one of the few things he's going to be able to use as far as calling it he's. And we'll see. And there's going to be this tremendous backlash all the way up. It started 4 or 5 years ago, talking about social programs. And of course, we know that there are social programs you have to have. I mean, that's the way a country works. It's the infrastructure. But we have never spoken about socializing everything from healthcare, funding colleges, tuition, every kind of tuition, babysitting, just all the different things that are extremely expensive. Not to say we wouldn't want that sort of thing, but hey, somebody has to pay for it. You can't have all 3, 4, 5 of them coming up at once. It's going to be very interesting. And that, I'm talking about it only because it directly impacts the market. I'm looking at the IYT as a harbinger of the Dow. It isn't confirming the big rally in the Dow. So we've still got to keep an eye on this IYT to say, yep, we could still have a pretty decent pullback. We've had a spectacular run from December the 26th to just recently. Hey, giving back some is just not a big deal, but it's how we give it back and what takes its place. And my thinking here is that we've got to watch the banks, we've got to watch the brokers, we've got to watch certain areas of the market, and we're going to be talking about the defensive area. That's defensive. That means your Cloroxes, etc., McDonald's. We're going to be talking about defense as it pertains, say, to a Raytheon RTN. Let's have a look at that. I haven't looked at it for quite a while. It's off the radar. I had a high of 229 back in April of last year, and it plunged down to 146, trading at 181. I still think that that is just in a sideways move at this particular point. This is going to be very, very important. Looking at it, I still think that, let's look at wheat. I've been talking about the grains for a while. I said I think the grains are starting to move, but a movement is no good unless you start to get the weekly chart improving. Let's wait until tomorrow at the close. So wheat is down $1.25 at 463.5. It's made a new recovery high. Soybeans is up 2 at 908. Needs to get to the 912 level for me to say, oh, okay, I think this is the start of a much better move. And cornish. Oh, what a nice move in corn, up 5 at 376 3/4. So the reason why I'm talking about this is for subscribers. We are long this in a particular way. These grains. Let's see if it can continue. These are continuous contracts. Let's see if the rally can continue. So as I'm looking at this, let's just go back to our 2-minute chart here just to show you how this works. So the 2-minute chart is making that 248 level, sorry, 2844 level, very strong support so far. So did I say 244? I mean the 2847 level that it was holding. It's trying to make this a base. Now, in the weekly chart, now remember that's the 10-minute chart. I'm saying daily, weekly, monthly, 2-minute, 5-minute, 10-minute. We could still go to a leg D between now and tomorrow to get above 2856.50. And that's going to be very important, because if you get that later in the day or tomorrow, that's going to say that buying wasn't a short covering rally. There is actual buying coming in there. That's going to be very important. And one of the reasons why we still remain all long, and it's because I need to see this through. I'm not convinced that I think we are starting the rotation into the consolidation that I've been anticipating. I just don't think the up move is quite finished yet. Let's just go to the S&P for a moment and see. S&P is now at 2843.98, a little bit off. It hasn't made a new. I want to see 2852.43. I want to see a leg C, because if that's a leg C, it's rather than a genus C. I'd be pretty convinced that we're probably in a leg C, and that should say it'll be next week that we can make a leg D. So far, this is very good action. I'll be right back. I haven't looked at oil at all. Thank you for reminding me about that. Oil at this particular point is down 44 cents, but it had a new recovery high today. I've liked oil for a little bit. I still like oil. I'll be back straight after these messages. Down 154.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up, Dave White comes up, Tom O'Brien comes up, and I'll be back tomorrow, but I'll be doing the early show at 8 o'clock and recording it for replay at noon. So MU is a question. So Jane, thank you for that question. I completely forgot to answer you. There was you asked me a question about a week or so ago, and I had it all ready to answer you, and then I forgot to send it. I'll try to find it, and I'll make another one. But you asked about MU. You said, I think I heard someone call a top on MU. Do you agree with that? Thank you. So I'm just going to say that Micron, TAC, trading at 43.36, up 3.23, had really good earnings. I don't know exactly what their mix is. I don't quite know where their particular chips go. All I can say is I'm looking at the price, and I think it's established a pretty decent low at the 38.57 area. I think it could pull back. It's in a leg D right now, spiking up, but something's good there, and they put their name on the block there. They say things are looking, it's been a tough environment. So if you're handling your inventory well, and that might be the case, that's the reason why they earned well. That's different because then you can, and I think the bar was set quite low as far as I can tell. So I'm kind of impressed. I don't think this is a top, but I would say that I would not be buying it here at 43.34. I'd wait to see for 2-3 weeks it doesn't break under something like the gap high of yesterday was the high for 40.75. I'm even going to give it a little room. If it can hold the 40 area, 41 to 40 over the next 3 weeks, I would say that maybe some kind of a bottom has been made of consequence. I don't think this is the top. I don't see how they could give that kind of an earnings report if we're going back to the December lows. That would be very disappointing all the way around. It would be 3 months of hell that they're going through for the next earnings to be bad. Next question I had, I'll do just before we go to the break, at the end of the show. IBB, is that the end of the IBB at 111.36, down $1.82? Very negative report today. On one of the biotechs, I'm just trying to think of the name. No, I don't think it's. I think it's staying in a range. Let's try to talk about it tomorrow and Monday. Have a great day. I'll see you all tomorrow, and good luck trading. And stay tuned for Steve, Dave, and Tom.
Larry